iPhone 13 on us for every customer. Current, new, everyone. To show the love.
How about sushi?
I just had sushi for lunch yesterday.
How about tacos?
Automatic emergency braking, one of 6 advanced safety features standard on every 2022 Chevy Equinox. Find new technology. Find new roads. Chevrolet.
I'm Deborah Owens, America's Wealth Coach, and it's time to get wealthy. You're going to learn exactly what you need to know and do to finally achieve the level of financial success you desire and you deserve. Is the lack of stock ownership in Black families limiting their ability to achieve high net worth status? High net worth status means you have over $1 million in investable assets. And according to a new study by the United Bank of Switzerland, or UBS, they found that Black households in high net worth status levels own less stock than their counterparts. And today I'm excited to be having a conversation about that study with Melinda Hightower. She's managing director and head of clients strategies for the multicultural segment of United Bank of Switzerland. And I'm excited to have her on Get Wealthy today. So welcome to Get Wealthy, Melinda.
Thanks so much, Deborah. I'm so excited to be here with you.
Well, I want to start this conversation just getting an understanding of what precipitated the United Bank of Switzerland of conducting this study on multicultural high net worth families.
Sure, and it's a great question. And United Bank of Switzerland is such a mouthful. We can just use UBS for short. And
okay, that sounds good.
So UBS, actually, the journey started about 5 years ago when UBS, we are the world's largest wealth manager. So when we took a look back and looked at what the future of wealth was holding, we noticed a few trends. We noticed that wealth was getting more gender diverse, it was getting more racially and ethnically diverse, and it was getting younger. And so what we did is that 5 years ago, we started looking at ways that we could make sure that our financial solutions worked for all investors and investors who typically weren't included in the investment industry at the very beginning. And so we started first with the women's segment and looking at ways to include women and ensure that they stepped into their power in investment decisions. Then a few years later, we moved on to rising generation. And for that, that means for us millennials, making sure that younger investors were equipped for the challenge. And then about a year ago, we launched the multicultural segment where we're focused on Black, Asian, and Hispanic and American investors. And so for us, it's the culmination of 5 years work. And then we're actually looking ahead to the future where we're going to be focused on an LGBT segment in 2023. So the work continues for us.
It continues, but let me just say how refreshing it was for me based on the work that we do at Wealthy U to have this study actually acknowledge financial exclusion. And in your report, that comes out loud and clear. And I just wanted to ask you a question about the way that the study is framed. It starts there in giving a historical context of how some of these policies have prevented African-American, Black families, Hispanic families, as well as Asian families from being able to build wealth. So just share with us a little bit about why you felt that was, or why UBS felt that was important to include as context.
Well, I think this is what happens when you get a Black woman running segment, we anchor on what is our shared experience and history. So I think for me in particular, I grew up with this. This is the knowledge that I had. I grew up going to the bank with my grandparents and looking around and realizing that the managers at the bank didn't look like me. And you always grew up with the knowledge of Freedman Savings Bank and all of the indignities that African Americans and Black people and people of color generally have suffered. So for me, instead, it's just as important to focus on the why as it is on the what. So when we take a look at, we have to start from, looking at how do family financial behaviors influence investment decisions, and those behaviors that I had growing up, for example, my grandparents saying, you got to focus on real estate and real estate only, or cash is king. Those are learned experiences based on their interactions with financial institutions. So we started from the beginning and we talked to these investors, all of the millionaires, and we said, what was your experience with financial institutions? And although many of them acknowledged that it was better for them today than it was for their parents, they were still facing discrimination firsthand. For example, Black millionaires in particular, 1 in 2 felt that they had been discriminated against from financial firms. And that's everything from not being offered the level of service that they were entitled to things like interest rates or credit products. They really ran the gamut when we talked to them, and they opened up and really shared their experiences. And for me, that was so eye-opening that you would think that having wealth changes your experience with the financial services industry. And we found that for many of them, it didn't.
That's interesting that you say, I'm so glad you're sharing this, because one of the things I didn't realize, Melinda, until we launched Wealthy You and then actually started coaching individuals, I went into a financial institution with someone to open up a SEP IRA. Just thinking that it was just like it was back in the day when I was in a retail investor center, and you sit down with someone, they show you their options. I mean, it wasn't like she had $1 million in investable assets, but it was about $30,000, right? And basically she was told, oh, get on the phone or go over to that computer. And I said, no, we came all the way down here so that she could sit down and talk with someone. So to be honest with you, I did not realize that in this day, this is still happening. And then I know a couple of years ago, there was an incident with a former athlete who had high net worth assets, and yet he wasn't given access, to your point, to some of the services that high net worth status should get you in many of these firms. And so before we go any further, I really would like for you to explain to our audience what does it mean to be high net worth, and how much money do you have to have in order to be considered that?
Sure. And I think before we get into that, I think when you go back to thinking about professional athletes, you don't even need to go back years. You can take a look at what happened in the last year or so with Ryan Coogler, who was trying to withdraw his own money from the bank and had to have a police interaction as a result of it, And so it's really interesting to me to see that in this day and age that this is still happening, frustrating to say the least. And so when we talk about what it means to be high net worth, every financial firm defines it differently, but the one mostly universal definition is that you have to have at least $1 million or more in liquid assets or net worth, right? Because financial firms are very interested in how can you make money work for you? And so they're looking at liquidity more than anything else. And so that's how we define it, liquid net worth. And so we would have even more millionaires if we counted the value of folks' homes, right? Because for many individuals in the US, your home is your largest asset, right? But that's one large investment that's not particularly liquid. And so we take a look at $1 million and up. that you can go and either withdraw or that you could liquidate in a matter of days.
Excellent. So I'm glad you explained that, because now I want to talk with our viewers really about, here are the things that you need to know about what it means to achieve high net worth status, right? First off is that U.S. economic policy, what you need to know is for many minorities, kind of prevented some of the expansion of the middle class. African Americans, Hispanics, and Asians were excluded from that. And then secondly, the lack of access to financial advice or financial institutions is one of the major reasons that many Black families in particular have lower amounts of equities or stock investment. And then third, you just heard it, high net worth status actually means having investable assets of $1 million or more. And because many of the wealth that Black families have has traditionally been in real estate, is one of the reasons that there probably aren't more African Americans who are considered high net worth. And so next, Melinda, our framework on Get Wealthy really is designed to cover three things. And it's mindset, strategy, and execution, that being kind of our framework for financial success. And so I want to start there as it relates to multicultural families and being able to really beat the odds, right? So you're in this study, you're sharing, I thought the number of 1 million families, multicultural families who are high net worth status, right? You interviewed 3,000. So that is a pretty significant sample. Yeah. And where I would like to begin with, what were some of the mindsets that those families, just broadly, were brought to the table in order for them to achieve that high net worth status in spite of all of the barriers and exclusionary hurdles that they had to get through?
Sure. And isn't it amazing that you had, despite all of those barriers, over 1 million to achieve that? So what we found in terms of mindset is a couple of things. We found that these families were, one, spending with intention. They, instead of, when you think about the psychology of money, we can have money avoidance, not these families. These families were really focused on money as a tool and really looking at an opportunity to direct their funds where their priorities were. And so we saw that really that intention, that discipline throughout all the families that we talked to. So that was the first step, sort of this spending with intention. The second thing that we saw is that they were reserving for opportunity. There was a high rate of saving among a number of those families. And I think those two concepts really go hand in hand. And they weren't just saving just to save, they were saving for a purpose. So perhaps they were saving to buy a home, perhaps they were saving to make a large investment. So that was the second thing that we saw. And then the third thing that we saw was that, you know, they were investing, not necessarily in the stock market, but they were investing in a number of different ways. And what we found with multicultural families is that they were less likely to invest in the stock market and more likely to invest in themselves, right? In entrepreneurship. They were really focused in that area. Another area was real estate. And that comes as no surprise to us, right? When we think about, we just talked about the history of financial exclusion and how this industry wasn't built with us in mind. And so it comes as no surprise that people were navigating different paths to wealth that really didn't depend as heavily on interaction with the financial industry. So those were the things that we saw. And then finally, what we saw is this real focus on legacy, that they were motivated by giving back to their community. They were motivated by making sure that their children had financial security. And so that was something that we saw that was driving all the families. It was something bigger than themselves that made sure that they stayed laser focused on those goals.
It just validates so much of the work at Wealthy You. We describe that as having a wealth mindset, and that is the ability to make decisions based on the long-term implication or long-term goals as opposed to that day-to-day. And that really comes back to the point that you made about being intentional. Now, one of the other findings just around mindset and what the findings showed is just more of a propensity for multicultural families to invest in real estate. Right. And you brought up the point that part of that could be, right, that because I don't have access, right, to like a financial advisor or that sort of thing, that may be the reason. But I wonder what you think about something that has become I've become even more aware of, and it goes back to our family experiences, that really the knowledge of how to invest specifically in the financial markets and those asset classes is inherited. What are your thoughts on that?
I couldn't agree more that, one thing that we do, that we pass down our money habits, we pass down our mindsets. It's not just the assets that we inherit, it's how to invest that we inherit from our families. My family was a real estate family. That's what they knew. My grandmother would say all the time, I like to drive by my money. And so real estate was the thing that, you could see it, you could touch it, you knew at any time that it was still there. Nobody was going to, take it away from you. That was really the focus, right? And I grew up and that was passed down. My mother and all of her siblings, home ownership was sort of that pinnacle, and not just home ownership, rental property ownership, having that second property that was going to work for you. That was something, we grew up on and were incredibly focused on. And the lesson that sort of coupled with that is don't ever pull any value out of your home. Don't ever, take a debt against your home. That was something that was crystal clear. And it wasn't until I got my first job and through my 401k that the light bulb went off and I said, wait a minute, I have to invest now, right? So it's one of those learned habits. And so whatever your family experience is, that drives through. And we found out when we talked to our millionaires that they grew up with the value of owning property. And that was something that really stuck out for them. More than half grew up being taught that property is something that you want to invest in. Now, that's not to say that real estate isn't a fantastic investment. And in many instances, it can be, especially when you think about, a rising interest rate or a rising inflation environment, right? So there's so many things that real estate can do for you. But I think the important lesson that we sometimes don't learn is diversification. So I do want to put this concept out there that you grow with money habits from your family, but sometimes you have to add on to those money habits. And we talk about a process at UBS of unlearning that you may have to do. Sort of what got you here won't get you there. You have to, if real estate is something that you learned, that's important, but then let's take a step back and how do we add on to that knowledge? How do we think about what other kinds of investments do we want to have in addition to real estate?
No, so insightful, Melinda. And, there's almost a thought, I think, around real estate. The fact is that that stocks have outperformed any other asset class. And, even looking at real estate, I think I just looked at some numbers historically, about 7.5, stocks about 10.5. And that 3% can be significant. And in addition to that, I think particularly for folks who own real estate, as African Americans, we haven't seen the type of appreciation right, of our in many cases, principal residences, although we're seeing some of that now. I know I was just in Detroit and a number of the urban cities looking at home values, but that too is one of the reasons I believe that the wealth gap is so huge.
Well, you touched on so many things, Deborah. So I think when we think about real estate coupled with the history of redlining that happened in Black communities, you see today sort of Black home ownership is coupled with this lower valuation of your home. Like we all read the headlines of if a Black person is selling their home, it gets valued at a lower price point than if a white individual owns the home. We've seen those subconscious things that happen even today. So when you look at the history of redlining coupled with home ownership, you're right. Real estate, and we talk, and it reminds me of the quote of one of my investors who invests in real estate. She's like, it always is going to go up. It might take 40 years, but it always is going to go up. And I think that's the mentality around real estate. And that's not to say that mentality is incorrect. But when you think about equities and when you think about the stock market, you're right. Even with this current dip in the market, if you had held equities or just the S&P 500 index, which is that collection of stocks that represents 500 of the largest companies in the U.S., your increase in value would have been up a little over 200%, even now with the dip. And real estate usually doesn't move that fast in appreciation, particularly in Black communities. So you also have to think about the time value of the appreciation of the asset. And I always tell folks, how much time do you have, to wait? And do you want to get to wealth faster? And equities is a way to generally do that. It outperforms and it increases generally at a faster pace.
At a faster pace, and because that's where I want to go next, because I think what you just touched on were the opportunity costs, right, of waiting, the cost of waiting. So when we come back, I want to go to the next part of our framework, which is strategy. And when we come back, I want to talk about some of the strategies that these multicultural families use to accelerate their financial growth in spite of the odds and achieve that level of financial success. So don't go anywhere, folks. We'll be right back.
Let's be honest, as successful women, we're crushing it. Maxed out 401k and Roth IRA? Check. Aggressive savings and investments? Check. Yet, the freedom our success was supposed to buy can leave us stuck on the six-figure hamster wheel, watching retirement slip further down the road. There's another way. Get coaching courses and community at wealthyu.com.
Love our new Alexa.
It's a Buick.
Yeah, Alexa.
Buick.
Alexa.
It's a Buick.
It's an Alexa. It's a Buick. It's an Alexa. Coach, that's a Buick. That's an Alexa.
The Buick Enclave with available Alexa built in.
Pull up a chair. Take your seat. The Black Tape with me, Dr. Greg Carr, here on the Black Star Network. Every week, we'll take a deeper dive into the world we're living in. Join the conversation only on the Black Star Network.
Verizon just gave us all a brand new iPhone 13.
We've been customers for years. I thought new phones were for new customers. We got iPhone 13s too, switched to Verizon 2 minutes ago.
Ours were busted, and we still got a shiny new one.
Check it out. So wait, everybody gets the same great deal.
I think that's the point.
iPhone 13 on us for every customer. Current, new, everyone. On any unlimited plan, starting at just $35. All on the network more people rely on.
Welcome back, everyone. I'm Deborah Owens, America's Wealth Coach, and I'm having a fascinating conversation with Melinda Hightower of UBS on their recent study on 3,000 high net worth families who have reached high net worth status, investable assets of $1 million or more, and what their experiences have been. Belinda, thank you so much for joining us. I know, can I call you Mel? I heard that okay, well, Mel, I'm going to call you Mel then to shorten it a little bit. So I want to talk about strategy now, because in Wealthy You, I tell folks, knowledge is not power, right? Knowledge correctly applied is. And so to that end, I want to talk a little bit about the study. And you talked about mindset. So let's talk about how they actually took that mindset about being intentional about their spending to now accumulating those assets. So what were some of the strategies that this segment used to build wealth?
So a couple different ways. I think what we saw is that they primarily, one, they invested in real estate. That was a massive way that in terms of we think about paths to wealth. The real estate was one, entrepreneurship was another. And it's an incredible path to wealth too. And I think, and we see the rates of entrepreneurship, entrepreneurs of color growing faster in the US than any other pace. We saw a lot of investing, not necessarily in the stock market, but we did see an interesting look at alternative investments. And by that, I mean, people investing in art, individuals investing in cryptocurrency. Some of those alternative investments, we saw there being an appetite to engage in. And so that was really interesting for us to see on the investing. And then for some cultural groups, we saw stock market investing. So it depends. The paths were different as we looked at each cultural group and how they were growing wealth. But by and large, what was interesting is that they were picking the path that worked best for them based on the access that they had at the time.
I want to talk about that too, because one of the things that I found really interesting, I want to talk about the differences, right? So we look at cultures and we know that the Black experience is different, whether it's an African American, Caribbean, West Indian, or African, right? We know that Hispanics, their journey a little different, their cultural nuances there, and for Asians. But what I found really interesting was that Asians in particular equated their wealth based on their earnings and income as opposed to other segments. And so my question in looking at that statistic was really, is that a function because of their professions that they chose or industry, or did you have any findings that could help us understand why a significant amount of their wealth was derived from actually earning their incomes and then turning that into wealth?
Yeah, so I think a couple things are driving that. But the most primary driver is when you take a look at some of the majority of the Asian investors that we surveyed were actually first or second generation in the US, and at an incredible rate. And so, for example, that was true of the Hispanic American experience, but not to the extent that it was of the Asian experience. So that is what we found. And when you take a look at the reasons for immigrating to the US, right? Let's put some numbers around it. So 67% of our respondents were first or second generation investors, our Asian American respondents. And their reason for moving to the US was a job opportunity or a higher standard of living. So their path to wealth was really already preset. They were coming for a wealth opportunity that was linked to workplace compensation. And what we heard over and over again from our Asian investors was that they were focused on 401k as a piece of it, but equity ownership awards in the companies that they worked for was another large piece of it. And
then what is so interesting? Yeah, I'm sorry, go ahead, because I want you to finish that.
Yeah, so there were three things that we saw. We saw the retirement piece through 401k or some other retirement plan. We saw equity ownership in the companies that they worked for. And then we saw for the cash wages that they were being paid, they were taking them and putting them directly in the market. Highest rate of equity investment with the cash that they earn of any group, more so, and even highest of all high net worth investors overall at 57% of the amount that they had that was liquid, that was allocated to equities. So.
No, that is interesting. You know, that's one of the things that we see in Wealthy You. Our highest earners typically have access to employee stock options, right, as a component of their compensation, and also in employee stock purchase programs. So I was fascinated by that. And then, so that's one strategy, right, that I think all ethnicities can really look at as they're looking at ways of opportunities for in careers, having that opportunity with the institutions that they choose to be employed by. But then secondly, another statistic that stood out for me in terms of strategies was that for Black females in particular, they had a higher percentage of their wealth being derived from business income. I take it that's entrepreneurship. And why do you think that trend is so significant?
Yeah, so and that is interesting because that's the Black women who cite entrepreneurship as their primary source of income. But when you think about how many Black women are receiving entrepreneurship income, period, the number gets even larger. It's 43% of Black women have some level of income coming from a business that they own. And I think that when you think about the access, and I think it goes back to the conversation we've been having, bet on yourself. That is sort of the cultural value that's being passed down, and taking control and ownership of your wealth. That what better way to do that is through entrepreneurship. And we see entrepreneurship being really sort of baked into the Black experience. So that is something that we see more so than anything else. And the numbers bear that out when you think that Black women are the largest category of small business owners in the US. It's the largest, fastest growing category of small business owners. And so we think that control, that engagement, that empowerment is what's driving Black women ownership.
It's interesting that you said that, Melinda, that it was not just the sole source of income, but some income. So what we're seeing even in Wealthy You is that more focus is on multiple streams of income and really diversifying those income sources in order to bulletproof your finances, right? For example, right now, what we're seeing economically are layoffs. Right. And in some fairly significant industries like tech. And so as a result of that, it's almost like I think the other trend is your ability, really, because of technology, to either, work as a consultant, monetize some of your task skills and talents, if you will. And I think employers being more open to that, as long as you're having these other sources of income. So when we come back, so we talked about mindset, we've talked about strategy. Now I want to talk about execution, especially as it relates to more folks getting into the high net worth segment. So don't go anywhere, folks. When we come back, we're going to discuss execution. And now, what are some of the things that you can learn from this study? The study is widely available. We'll make sure that you have access to some of these findings so that you can gain more insight and then apply them. Don't go anywhere. We'll be right back.
Verizon just gave us all a brand new iPhone 13.
We've been customers for years. We got iPhone 13s too. Switched 2 minutes ago, literally right before this.
iPhone 13 on us on any unlimited plan for every customer, with plans starting at just $35. All on the network more people rely on.
Love our new Alexa.
It's a Buick.
Yeah, Alexa.
Buick.
Alexa.
It's a Buick.
It's an Alexa. It's a Buick. It's an Alexa. Coach, that's a Buick. That's an Alexa.
The Buick Enclave with available Alexa built-in.
Welcome back to Get Wealthy. I'm Deborah Owens, America's Wealth Coach, and we're having a fascinating conversation about a recent study, Investing to Advance by UBS. And with us today is Mel Hightower. She is head of managing director and head of their strategic client multicultural segment. I hope I got that right. Mel, thank you so much for this conversation and just your unique insight. I mean, I love that, off the top, you really share, this is sort of what happens when you're able to bring your experience to it. But now I want to talk about execution. And that is, we talked a little bit about, the intentional spending, the findings that you saw with Asian Americans taking that additional income and investing it into the market. I'm more interested, of course, because Get Wealthy, we focus on African American, not just African, but Black folks, and them, more of them getting into the high net worth segment. So my first question to you goes back to our conversation around the lack of equity ownership. What do multicultural families need to do so that they can accelerate their financial growth by adding equities into the equation?
Yeah, so I think the first thing that families need to really take a look at is take a step back and look at how you're invested overall. And that's what we call sort of asset allocation. What percentage of your investment is in equities? What is percentage of it is in property that you own, et cetera, et cetera. And then you want to really develop percentages that align with what you want, right? So if you are in a growth phase, you would have a higher allocation to equities than, say, for instance, you are in sort of a steady state income only phase where you're more sensitive to fluctuations in the market. So I think the first thing you need to do is take a look at your overall asset allocation. Then I think the second thing, and at UBS, we think about sustainable investing as the cornerstone of our business. So I always tell people to think about what are you interested in investing in? What are your values around investing? So for me personally, what's important is advancing racial equity. So I take a look at, is there a way for my equity investment to align with that? Can I invest in Black businesses? Can I invest in mutual funds or ETFs or whatever they might be that are run by diverse individuals, or where the investment decisions are made by diverse individuals? And so I'm laser focused on that. And I make my equity investment decisions accordingly. So that's one thing that I focus on to try to align. And I do think that it's important to have a conversation with someone you trust who has been advising others. And that doesn't mean that you ultimately have to work with that financial advisor, but I think there is an opportunity to educate yourself to see what options exist out there for you around your priorities, and really decide your plan of attack from there.
So to that end, one of the questions I want to ask you about are the findings. I mean, the fact is that African Americans own less equities than, if I'm not mistaken, was it every multicultural segment?
That's right.
Is that right?
That's correct.
So if we look at the wealth gap, right, because that's what I want to get to execution. And we look at the fact that the last stat I saw said that in your study, it says the high net worth, even assets, those with $1 million, the number was 26% in equities versus 41%, right, in the majority. And then if we look at Black households overall, we only see equity ownership, maybe I think the number was like 35% or 30%. And typically that is through our defined contribution plans or 401ks, 403bs. So I guess my point is, what I have seen so often is that because of the lack of knowledge about asset allocation, how to invest, historical returns, that many Black households are opting into the most conservative frameworks, regardless of whether or not they're in a growth phase or not. What advice would you give to folks about increasing their tolerance for risk so that they understand the trade-off between risk and reward?
Right. And I think that there's so much to unpack there. So I think the first thing that you want to do is think about what are your financial priorities. And when you increase your and you might be a conservative overall investor. And so what I would say to those individuals is that you still want to invest in equities, but your approach may be different. So for example, if you have a higher risk tolerance, then you may want an index. You may want a basket approach. And I usually tell people when they're investing for the first time, being a stock picker is not your friend. You want to, it's just not. There are people who are paid a lot of money to really examine stocks and closely follow them. No, if you're investing your own money and you are dedicated to another path of work, I believe in the power of index investing. It's something that I do myself personally. And so when I tell people the best way to increase your equity percentage in a way that is probably the least risky is to take a basket approach. So think of something, we talked about the S&P 500 index at the beginning of this conversation. And I think that that's the way that I would get started. And I think you have to, what I would call, leg in over time and commit yourself. And I think sometimes to go from 26% of equities to 60% overnight, that is a tough transition. And so what I tell many families is you want to think about what percentage you want to leg in over the period of time. Maybe you want to do, a couple percentage points each quarter, whatever works for you, whatever is tolerable for you. And that's what you want to do. But the point is you have to increase, and you've got to start somewhere. And I think that's really important for families to think about. And to do it in a broad-based basket of stocks approach way is where I would tell people to start right away. Leave the stock picking, I think, to the experts for now.
Okay, Mel. Well, no, I can appreciate that. So when we come back, what I want to do is kind of, it's our analyze, optimize, maximize. We've covered a lot of ground today. You've given us a lot of insight. And so when we come back, I want to wrap it up by having you really share succinctly, based on these findings, how can people take this information, put it into play, and we get more people into the high net worth segment. So when we come back, it's analyze, optimize, and maximize.
How about sushi?
I just had sushi for lunch yesterday.
How about tacos?
Automatic emergency braking, one of 6 advanced safety features standard on every 2022 Chevy Equinox. Find new technology. Find new roads. Chevrolet.
We're all impacted by the culture, whether we know it or not. From politics to music and entertainment, it's a huge part of our lives, and we're going to talk about it every day right here on The Culture with me, Faraji Muhammad, only on the Black Star Network.
Are the only bins that will accommodate larger overboard.
They put 10 in here?
10, and you don't come out till you die. And you eat him, you eat 10.
Oh my God.
I'm Deborah Owens, America's Wealth Coach. I hope you've been enjoying this conversation about multicultural high net worth investors. What is it going to take for you to accelerate your financial growth to $1 million in investable assets and beyond? And my conversation today is with Mel Hightower of UBS, and we've been talking about their study on high net worth investors, those investors with investable assets of $1 million or more in the multicultural segment. So Mel, now I want to, based on everything that we've talked about,
right?
If our audience looks at this study, analyze, optimize, maximize, put it in that framework, what are the things that they need to do now to really put things into play in their favor?
Yeah, and I'll give you the process that we use with all of our clients, and we bank one in every 2 billionaires. So this is the process that we use for billionaires. We say, step one, the first thing you have to do is analyze two things. You need to get to the heart of your ambitions and passions. You need to ask yourself questions like, what excites you about the future? What keeps you up at night? What is your life's vision? Do you want to take care of the people that matter most to you? So you want to really get to what your financial priorities are. The other piece you want to do is see where you're at right now. And that's that asset allocation analysis that we talked about. Really, how is your money invested today? The second step that you want to take is you want to organize your goals around 3 buckets, right? And we call it liquidity, longevity, and legacy, but think about it as short, medium, and long term. You want to have a bucket of money or cash that really is what I would call the short-term lifestyle. And then you want to have another bucket of funds that is what I would call longer-term needs, right? And really sort of thinking about your retirement, things that are happening long range during your lifetime. And then the third set of funds is for legacy beyond your own lifetime, your family, your community. After you're gone, how do you want to improve the lives of others? So you really want to allocate your wealth among those 3 buckets. And then based on that, you want to start planning for success. And that means you have to start investing in equities now. It also means that you have to also have a plan for passing down that wealth. And so I have to say this as a former tax lawyer, you must have an estate plan, because all the wealth in the world isn't going to help you when it comes to federal and state taxes. So there is nothing to do. I mean, it's like you can earn all of this wealth and then have 50% of it gone because you didn't plan for the tax effect, and you didn't structure your wealth appropriately. You didn't use, for example, a trust to be able to pass your assets on, or you didn't plan for something. So I think having that plan is really important. So you want to invest, you want to have a plan, and then finally, you want to pass down that wealth mindset. You want to have the conversations with the people that you love and the people who matter to you, who will be the beneficiaries of your legacy, to really talk to them about what are your values around money? Why are you doing the things that you do? Why are you investing that way? Because if not, your children will mimic you and not know why. And then that is the reason why we see many people losing the wealth that they've accumulated by the third generation.
Wow. Now that's wisdom. Mel Hightower, you've given us a lot to think about, but more importantly, you've given us insight on what millionaires, those and billionaires, I had no idea. Your company, what did you say? How many?
1 out of every 2 we provide financial advice to. So yeah, what I tell people about wealth is that you got to learn from the people who are already there. Wealth is not something that is new. So learn from what people who have already been there and apply their lessons to your life and how it fits for you.
Mel Hightower, great advice. That's exactly the insight that this study from UBS, Investing to Advance, shares. And I hope you have found this conversation fruitful. And I always say the most valuable asset of all is the knowledge of how to build wealth. So Mel Hightower, thanks so much for coming on Get Wealthy.
Thanks so much for having me.
Fantastic. When we come back, the 3 takeaways from today's show that you need to have in order to make sure that you make it into that ultra high net worth class. We'll be right back.
Verizon just gave us all a brand new iPhone 13.
We've been customers for years. I thought new phones were for new customers. We got iPhone 13s too, switched to Verizon 2 minutes ago.
Ours were busted, and we still got a shiny new one.
Check it out. So wait, everybody gets the same great deal?
I think that's the point.
iPhone 13 on us for every customer. Current, new, everyone. On any unlimited plan, starting at just $35. All on the network more people rely on.
Love our new Alexa.
It's a Buick.
Yeah, Alexa.
Buick.
Alexa.
It's a Buick.
It's an Alexa. It's a Buick. It's an Alexa. Coach, that's a Buick. That's an Alexa.
The Buick Enclave with available Alexa built in.
Of course, I looked up to Spike Lee. Of course, who didn't? I mean, he's a genius. But then also, I was this kid from Brooklyn,
right?
That felt like, you know,
give me my damn respect.
I made this, this creative art, right, that people are responding to. And it would have been great if we had the opportunity to sit one-on-one.
Hold on 1 second.
Okay.
Spike.
What's up, babe?
So I'm in LA right now. I got a one-on-one series with my network, Black Star Network. And I'm interviewing Maddie Rich.
I appreciate that, bro. That's a big moment, man. That was like, man, that was good. Got me all choked up. That's good.
Well, I'm all about connecting.
Appreciate that, bro.
Thank you so much for joining us on Get Wealthy today. I hope you learned a lot about what it takes to make it into that status of high net worth. But here are your 3 takeaways from today. First, it's increase your financial acumen. Once you learn how the financial markets work, you're going to be more comfortable diversifying into all asset classes. And that means not only investing in real estate, but investing in stocks, equities, and other types of investments. And then finally, the most important thing is that you partner with a financial institution that you know values your overall financial well-being. Thanks for joining us on Get Wealthy today. I'm Deborah Owens, America's Wealth Coach, and you're watching me right here only on Black Star Network.
How about sushi?
I just had sushi for lunch yesterday.
How about tacos?
Automatic emergency braking, one of 6 advanced safety features standard on every 2022 Chevy Equinox. Find new technology. Find new roads. Chevrolet.
It's time to be smart.
Roland Martin's doing this every day.
Oh, no punches!
Thank you, Roland Martin, for always giving voice to the issues.
Look for Roland Martin in the whirlwind, to quote Marcus Garvey again.
The video looks phenomenal, so I'm really excited to see it on my big screen.
Support this man, Black Media. He makes sure that our stories are told.
See, there's a difference between Black Star Network and Black-owned media and something like CNN.
I got to defer to the brilliance of Dr. Carr and to the brilliance of the Black Star Network.
I am rolling with Roland all the way.
Honored to be on a show that you own, a black man
owns the show.
Folks, Black Star Network is here.
I'm real revolutionary right now. Rolling was amazing on there.
Stay black. I love y'all.
I can't commend you enough about this platform that you've created for us to be able to share who we are, what we're doing in the world, and the impact that we're having.
Let's be smart. Bring your eyeballs home.
You can't be black-owned media and be scared.
You dig?